Hey guys, welcome back to another video. So today I'm going to be going over PayPal. I'm going to be going over what to expect from PayPal this year and some price predictions from myself and from analysts for the near term. So here you can see PayPal closed on April 1st at $116.67. Their market cap is around $136 billion and their one-year target estimate is $180. So it's pretty crazy to see PayPal at these prices right now, because this is actually what it was trading at in July of 2019, so pre-pandemic. And in that time, PayPal has actually grown a lot. So last year, total payment volume for PayPal and across all of its platforms like Venmo and Zettle, it rose 33% to 1.3 trillion. And actually, prior to the pandemic in 2019, PayPal only processed $712 billion. So PayPal generates revenue by taking a fraction of every payment processed. So this 76% increase means that PayPal is generating a lot more revenue. You know, it's ridiculous to see PayPal trading at these low prices. You could argue that PayPal was just really overvalued before the pandemic, but definitely now with how much they've grown, there's just no way that PayPal should be trading at these prices. By the way, don't forget to subscribe if you're not already. It means a lot. Thank you. So here I have their earnings estimates pulled up for 2022 and 2023. Here their sales growth is supposed to grow 16% this year, and then it's supposed to actually grow a lot more in 2023, a 20% increase. As far as earnings per share goes, $4.65 is the average estimate for this year, whereas last year it was $4.60. So you can see this is definitely good growth. It's not a lot of growth, but it's decent growth, especially considering that a lot of other companies, they're actually not going to grow this much this year in comparison to last year. Now here, this is one of the things that PayPal actually has in its favor, and that's inflation. Here, this is what this is saying, and this is from the Motley Fool. If products cost more, PayPal's total payment volume will rise accordingly. That's pretty obvious, because if things cost more, then obviously people are going to have to charge more to their cards or to their accounts. And that'll just benefit PayPal because they take a cut of every transaction. However, if consumers cope with inflation by not purchasing as many products to keep their overall spending the same, PayPal won't see a large total payment volume expansion. I don't really see this as a concern, because people have to keep buying stuff. Just because there's massive inflation, you can't just stop buying stuff. Obviously, you'll probably buy less, but overall, it shouldn't really matter that much. Now, management is guiding for a 19 to 22% total payment volume growth through 2022. So that's definitely a very positive thing to see, that PayPal is continuing to grow, even though they grew so much last year and in 2020 that it's going to be kind of hard for them to continue growing at that pace. They're still growing very well. Now here, if you look at this chart going back to 2016 and up to right now in 2022, you can actually see that PayPal is trading at a very similar price to earnings ratio and a price to free cash flow ratio. It's definitely a fairly valued stock, because you can see over the long term, this is kind of the range that PayPal is trading at. But you could also argue that this stock is undervalued, because you can just see how right here, PayPal's price to free cash flow ratio was just through the roof. And obviously right here, you can see that PayPal's price to earnings ratio was also very high. So we could very well see valuations like this again. But maybe PayPal is just fairly valued right now, which isn't a bad thing, because PayPal is definitely continuing to grow and will grow for the next decade or more. Now, as far as valuations go, right now I have this stock fairly valued at $161, which gives us an upside of 38%. And the way I got this valuation was I took the current stock price, their current book value per share, their estimated earnings per share for 2022, and then a maximum price to earnings of 30 and a maximum price to book of 10, which is actually pretty in line with what PayPal has seen historically. Like here, you can go to their price to earnings. It usually traded around 30, and here, their price to earnings I put as a maximum of 30. You can definitely put it higher if you think that PayPal deserves to trade at a higher price to earnings, but I think 30 is pretty in line with other growth stocks as well as other stocks and companies that are very similar to PayPal. Here, as far as analysts go, there's a whopping 57 stock analysts for a 12-month stock price forecast, and their average estimate is $184, which is an upside of 58%. So their valuation is actually a lot higher than mine. It's about $20 more. So that's actually good because I like to usually lowball things. And then their lowest target is $108, which is also good to see because that means that we have very little downside potential for PayPal right now. Here you can see that would actually give us about a 7% downside, which is not bad at all. And then the highest is $283. So the highest would obviously be if PayPal just started outperforming themselves, all the guidance that they put out, and they were just growing and growing massively this year. We'll probably see them grow pretty much in line with what they've said. They might have a little bit of an earnings beat. I don't see them missing earnings because they put out pretty conservative estimates in my opinion. Here you can also see that from these 57 stock analysts, the overall rating is a buy, which is really nice. And there's only one analyst saying that you should sell. The rest of them are either saying that you should hold, buy, or it's a strong buy. There's a lot of people that are really bullish in this stock. However, with all stocks, especially growth stocks, having been beaten down recently, that's why this stock is trading at the price it is right now. But overall, a lot of people are definitely attracted to this stock. It's a very strong company with good gross margins, a lot of revenue, plenty of earnings, and this company has a lot more room to grow, especially because they're really transforming their business now. Anyways, let me know what you guys think about this stock. Just comment down below and don't forget to like, comment, and subscribe.